1310 WIBA and Ask the Experts with Wisconsin Capital Management. Joined this morning by Tom Plumb with Wisconsin Capital Management. He is a CFA. You can learn more online. Their website, wiscap.com. That's WISCAP.com. Tom, how you doing this week?
Oh, doing good, Sean. I enjoyed 4th of July and back to work.
Yeah, I got to guess, and correct me if I'm wrong, returning from like a long holiday week, for folks that don't know, in the financial world, they're pretty busy days, aren't they?
Oh, yeah, definitely. And this one, of course, gets compounded because we had the, in quote, big, beautiful bill signed on Friday. But also right after the holidays at 4th of July, we already get into earnings season.
Oh, wow.
And by the end of this week, we'll have the major banks report what happened to them in the second quarter, what's happening to their interest margins, and what their projections are for the rest of the year. And so we really start getting right back into it right after the holiday.
So we'll have plenty to talk about for this week for sure, Tom. Before we get to this week's conversation, let's actually just get a quick review for folks that are new to the program. Of course, welcome you all to the show. Tom, this is our second show that we've done together. Let's talk a little bit about you, a little bit about your background, and of course, a little bit about Wisconsin Capital Management.
You bet. So Wisconsin Capital Management, basically a company started in the 1980s by myself and a couple partners. And they have gone their separate ways. We've had a few different changes over that time, including we started a balanced mutual fund way back at the end of the 1980s, and then sold that fund to a company called Tariffs. And we started a trust company in 2000, and we sold that company in 2019. And now Nathan Plumb and I are spending our time devoted to managing our proprietary mutual funds, managing portfolios for our high net worth clients, and doing the research and analysis that we love doing every day.
And Tom, as we talk this week, I think sometimes people will hear all the great benefits of working with you and working with Nathan. Sometimes think that you must be global, or you must be national, you must be a big outfit. You guys are based right here in southern Wisconsin, right here in Madison, aren't you?
Oh yeah, we've been here again almost 40 years.
That is amazing. We're going to talk as we talked this morning with Tom Plumb with Wisconsin Capital Management. We're going to talk about a little bit about the environment and the investment environment. Get those details in just a moment. I hope you've had a chance, though, to check out the website wiscap.com. That's WISCAP.com. You can learn more about Tom. You can learn more about Wisconsin Capital Management and what makes them so special and unique. Again, all on their website, wiscap.com. So before we kind of get into that investment environment, let's actually talk a little bit about the decision-making process, how it affects your asset allocation, and of course, the big thing is potential returns, Tom.
Right, John. We talked last week about how the compounding rate, the rate of your return and time are the eighth wonder of the world. And, today I thought we could talk a little bit about time, because time can be your friend or it can be your enemy when you're making investment decisions.
Let's talk then as we kind of break down how that time can work for you and against you. Let's start off. Obviously, I think anyone that listened to last week's program, we did talk a little bit about some of the benefits. Time is on your side if you've got it when it comes to investing, isn't it?
If you are invested in good companies or good investments over the long term, that compounding can really create wealth. But sometimes investment strategies are short-term, and sometimes time can work against you. Certainly, time can work against you if you're borrowing money, for example, because that compounding goes against you. But also the types of investments. Some people have asked us about day trading or using options, for example, to, in quote, benefit their returns or to increase their potential returns. And we like to warn them that time in those situations can really work against you. And you need to make sure the timing of your investments is important, but the time spent in that investment is also incredibly important. And you have to match it up with the type of investment you're involved with.
Tom, let's take it. Oh, go ahead. Excuse me. I didn't mean to interrupt. What were you going to say there?
Well, so I was going to talk about options. You know, many years ago, I saw a company that I thought was going to break out.
Hmm.
It was trading, I think, around $15 a share, and I bought some options to uh, acquire that stock at the $15 a share. And within 4 months, it went up to $25. So
Nice.
that option would have quadrupled had not it happened 4 months after I acquired a 3-month option
Ooh.
and lost all that return and all that money, period, because in options you can lose 100% of your money. But that's just one example. You also have the ability, or people are talking about day trading and how they can convert short-term gains into significant assets. And I can tell you that's a game that very few people win at.
I was talking this morning with Tom Plumb of Wisconsin Capital Management. Tom, it's interesting you mentioned the day trading thing. I remember, I've always been kind of a computer nerd, and when the internet was really getting hot, when it was still kind of that new thing, I remember a lot of people I knew started trying some of the different platforms and things, and it was interesting because you'd never hear about losses, and I feel like there's a lot of this stuff. Well, you heard when they picked a winner, you always were sure to hear about it, weren't you?
Oh, that was definitely true. Yes. And it was really common, of course, just 10 years ago or so. I think right before the financial crisis, actually about 15 years ago, people thought they were going to make a ton of money by day trading. And, then you lose it all in one day, and it's all of a sudden they find other things to do.
And Tom, with that too, as we talk about the world we're in these days, knowledge is out there, and there's information out there, and having the right eye and the right mind to interpret and understand that. I think sometimes with every profession, sometimes as lay people we see things and we think, I've got this figured out. There's a lot to this stuff, isn't there, Tom?
Oh yes, it can be. I mean, you can cut it down to the significant items that are really important, but there's a lot of noise out there and there's a lot of information, and you have to be able to cull through that and make sure that you have specific knowledge, not general knowledge. So, when you talk about, for example, making any type of investment, one of the key things is, what do you really know about that investment? How does it act in different types of investment climates, which, as we know, can change day to day? And do you really have something that tells you that you have an edge, that you're going to be able to uncover something that's valuable that nobody else has uncovered? And that's very difficult today with all the information that's at people's fingertips, and especially with the fast computers that allow some professional people to act very, very quickly and execute their transactions.
Talking this morning with Tom Plumb. He is a CFA with Wisconsin Capital Management. You can learn more about Tom as well as Wisconsin Capital Management all on their website, wizcap.com. That's WISCAP.com, wizcap.com. And Tom, the word expectations is an important one when it comes to this stuff. Let's talk about expectations, and a lot of times kind of baked into those prices, aren't they?
Oh, definitely should. When you think about it, when people ask me often, how come this good news and the stock market went down, or there's some bad news out there and the stock market went up? And it's really based on the rational expectations that were going into that day. And sometimes you'll see an event like, for example, Friday, the tax clarification, and it may not be a catalyst for the market to immediately go up. It may already be baked in. And certainly with some of the individual companies, it may already be baked in. So we'll see. But what we do know is that expectations are a key variable in the short run on any stock or any investment that you make.
Is it sometimes difficult for folks to identify the difference between a fad or like a true opportunity, just something that's hot, something that's trendy? Is that sometimes hard for folks to identify?
I think Sean, it's very hard, and it can sometimes be, it can take a lot longer for a fad to fade than you would think. And sometimes it takes a lot longer for a true trend to develop and get legs. So I think it's very important to try to understand what the variables are that have made this investment go up or down, or that you're getting in the press, for example, and how much of it is already baked into investment prices that are out there. We like to think that you have to go back to the fundamentals of why something is happening and see if that holds water for what will be happening in the next 6 months, next year.
Tom, is it sometimes hard for, and obviously as a professional, for you, you're viewing this information through a different eye. I think we all have biases, we all have beliefs, we all tend to maybe overestimate our own personal abilities. And we were talking earlier about folks that try the day trading stuff and kind of what went on with them. I think about fads as being one of those areas where sometimes I think as just if we're trying to do this on our own, we tend to be quite susceptible to those things because, again, going back to hearing from our friends that this stock has been hot, or this opportunity has been huge for me, that we're not always good with our head. We're good with our heart, and of course, a lot of us these motivations. We don't always see that kind of the underlying fundamentals. And we talk about what your role is. That's really what you're watching there, isn't it? Is paying attention to those fundamentals.
Yes, Sean, you hit it right on the head. When you think about any time in the short run, the price is determined by whether or not there's more demand than there is supply, and vice versa. So stocks can go up or down, bonds can go up or down, any type of investment, real estate can go up or down. It's all based on at the margin, whether or not there's more demand than there's supply for that particular type of investment. So when you start to see the demand pick up, then you really want to gauge whether or not there's something that 6 months from now, there still would have a fundamental reason for that demand to be stronger than the supply. And that can come when you have companies where you can see some significant trends that are feeding into each other and then making it happen. We talked last week about data and how data is being used. Certainly the last 6 months, 9 months, people have talked a lot about artificial intelligence, but that's only the last leg that we've been talking about as we've seen the need for data and processing time speeds continue to grow and grow and grow. And we'll see that trend continue. Now, the thing that you want to watch is to see whether or not this oversupply of data centers, for example, because at some stage, there's everything that grows dramatically like this has. You get a little bit of a disruption in supply and demand as people start anticipating growth rates faster than what they actually can be sustainable with it.
Fascinating stuff, as always, as we talked this morning with Tom Plumb. He is a chartered financial analyst with, of course, Wisconsin Capital Management. You can learn more about Tom and learn more about Wisconsin Capital Management all on their website. It's a fantastic website. Learn a little bit about their mission, a little bit about the team as well, and how they can help you. Just head on over to that website, wizcap.com. That's WISCAP.com. Of course, get to know a little bit more about Tom and Nathan and everyone at Wisconsin Capital Management on the website. I started this week's program talking about what's gone on this past week. It's been a busy one. We're going to break down some of those numbers and some of those pretty significant things that happened this past week with Tom. We will do that next as Ask the Experts with Wisconsin Capital Management continues right here on 1310 WIBA. 1310 WIBA and Ask the Experts, hanging out this morning with Tom Plumb with Wisconsin Capital Management. Tom is a chartered financial analyst. You can learn more about what a CFA is, learn a little bit more also about Wisconsin Capital Management on their website, wizcap.com. That's WISCAP.com. And Tom, we started this conversation off saying a lot can happen in the week. And of course, with the holiday and some big news this past week, a lot has gone on. So let's take a look at kind of what's all happened. Specific, we'll start out with talking tax and tax structure. What's going on there, Tom?
Well, on Friday, July 4th, President Trump signed the Tax Act that extended the lower tax rates that the 2017 Act had. but also added some other changes and modified or changed some of the tax provisions that have been in the 2022 Act. So right now, what we're starting to see is a lot of dissection because, as people may recall, it was about a 900-page bill. It was voted on very late at night, and there's continuous debate about all the implications that we're going to see there. And some of those implications, are going to be pretty severe for different sectors of the economy, and some of them should be very positive. But disseminating which ones and at what time these things will actually affect you is going to be quite a challenge. The tax structure now, by being set for the next few years, does give certain amount of planning capability for every business and individuals on some of their plans on major purchases. Certainly, the accelerated depreciation on certain types of capital investment are going to fit into a lot of the planning that companies do. But we still have an incredible amount of uncertainty about the tariff policy. And if you don't know what your supply chain is going to look like and what the costs are going to be, that has become also an uncertainty in trying to make some of these big capital investments. So right now we'll see a tug of war as we go through some of the positive provisions as how it affects people, and then again some of the negative provisions that are going to affect certain segments of the economy. Many people are concerned about what might happen, for example, to our rural healthcare system because of some of the cutbacks that we've seen.
I was talking this morning with Tom Plumb of Wisconsin Capital Management, getting a breakdown of some of the news that's happened in this past week. Of course, the first word is the big in that tax bill, and of course, a lot to get into. Kind of getting a breakdown of where things stand right now. And of course, Tom, you mentioned the tariffs, and as we talk, what is today, Tuesday the 8th? You never know what the next few hours may very well bring, and whether it's strategic or otherwise. I know that does cause folks to kind of their ears to perk up and kind of cue in on some of this stuff. I also know some of the areas, things like as somebody who drives an EV vehicle, there was some questions for a while there about where that's going. We've got a little bit more clarity as far as tax incentives for them, haven't we?
Yeah, those tax incentives will start to phase out for certain types of investments, but then they're going to be offset by the $10,000 credit for buying something made in America. So how that'll all pan out, we're not quite sure. But what we do think is going to happen is that people will start to understand these rules, start to make some plans, and then those plans become, the reality that we all start to see in the economy going for the next few years.
Where then, for investors, where's their attention going to be focused in these next few weeks and months, Tom?
Well, Sean, the first quarter before the tariffs were announced in April, last year in the January earnings season, artificial intelligence was mentioned. There's a lot of Google searches that show you when companies are making these presentations how many times they use certain words. Artificial intelligence was used dramatically in the December quarter. Tariffs were used as a significant issue to talk about by all these major companies in the first quarter. The third quarter now, which is going to be the July earnings report, it's going to be very interesting to see how some of these things actually have played out, because tariffs were a major concern with the consumer products companies and some of the companies that are manufacturing things here in the United States, including the automobile industry. Now, how they've adjusted, how the companies have adjusted, what they're actually seeing in buying patterns, that will become pretty significant. We just saw today that a company called Constellation Brands, which sells Modelo and Corona beer and other things, said that the lower income, especially the Latin Americans, were not having as many gatherings, for example. For the year over year, their beer sales were actually down for the first time in probably 10 years.
That is fascinating, and obviously, as we talk about these things and all the different implications, it's very fascinating to follow this stuff, and it's a great insight as well as we talked this morning with Tom Plumb of Wisconsin Capital Management. Don't forget you can learn more about Tom and the team. I mentioned the website. I hope you get a chance to head on over there, wiscap.com. That's WISCAP.com. Of course, things are developing throughout the day. It's always good to keep in touch. Again, you can learn more online, the website, wiscap.com. Speaking of getting to know Tom, something I learned about you, Tom, you are a bit of a cigar aficionado. Am I right on that?
I do enjoy a good cigar, and was able to have a couple of them over this weekend by my fire pit by the lake cottage. And I would say that I enjoy them. I don't think I'm somebody who smokes one a day, but I do smoke occasionally, and I really do enjoy that.
They say quality over quantity with those, right? That's for sure. Tom Plumb of Wisconsin Capital Management. Again, that website, wiscap.com. That's WISCAP.com. Tom, it's always great talking with you. Thanks for taking the time this morning. We'll do it all again real soon.
All right, Sean, thank you.
And again, the website, wiscap.com. That's WISCAP.com. News comes your way next right here on 1310.